So you want to become a millionaire? I guess who doesn't want to be one? And in this video, I will show you that it actually gets way easier as soon as you cross 100,000, because that's the magical point after which the journey to becoming a millionaire actually gets significantly easier. And that has to do with the power of exponential growth. The great Albert Einstein actually called it the eighth world wonder, exponential compounding growth. And I'll show you in a second how that actually looks like and what it does to your money. But essentially, it means putting your money to use to work for you. Because there are two options. You can have linear growth or you can have exponential growth. And that's what it looks like over here. Basically a straight increasing line. Imagine you add every single month a certain amount into your savings account without any interest. So basically it would just grow over time by that amount and it wouldn't change, right? If you don't change the amount, there's no interest on it. It would just grow and grow and grow, but in a very linear line. So you can very easily calculate how much you'll be having in 20, 30 years from now. Now, that's probably not the best way to go about it. You can see there's another growth curve. It's called exponential growth. Now you can see in the beginning, even though the base in this example is also a little bit lower, but after a certain point, the inflection point, we call it, that will be the intersection over here. That's the time period over here you see at the bottom. At some point, it will start growing significantly and exponentially. Think of it like an avalanche or snowball rolling down the hill, right? In the beginning, it can just be a small little snowball, but as it starts getting speed and rolling down the hill, it will collect more snow, become a bigger snowball. And once it hits the valley, it might be a huge avalanche actually. The same is true with your money. Let's visualize it running some numbers so you can get the idea what I actually mean by it. So in this example, I'm using euros, but of course you can use any currency you like. The idea is the same. In my case, I'm going to use euros. Let's have 1,000 euros starting investment for the year. Let's apply an 8% interest rate. Now, 8% is basically the average return of the S&P 500 over the last 30 years, give or take 8, 9, 10%. But let's be on the lower end at 8%. And let's take a 1-year period so you get the idea of what it is and no additional deposits. So you just take a one-off amount, you invest into the stock market, and let's see how much you get. So basically, initial balance is 1,000 euros. And after 1 year, you're going to have 1,083 euros. Not very exciting. And that's what I said. It's so difficult in the beginning because you won't see any growth. That is very much a linear growth. There's no compounding taking place. And if you see the graph over here, it's very little interest. The orange part is the interest part that you get paid. It's tiny. Basically, the majority is your initial capital or investment that you had. And then only after the 12 months, you start seeing a little bit of interest coming through. But let's start growing the snowball a little bit bigger and extend the period. So let's go to a 10-year period when we're still going to stick with the initial investment of 1,000 euros. We keep it at 8% interest. And of course, we could choose not to make any additional investments to the portfolio. But honestly, as you can imagine, that wouldn't be the smartest choice. And we want to be long-term investors. So I'll show you just how it looks without any additional investments. So your portfolio will have more than doubled to 2,200 euros. And in interest alone, you would have earned 1,200 euros. So the majority of the returns in this case would already start coming from interest. So you see already the interest growing over time. But it gets better if we add additional investments to it. So let's put a deposit amount additional 1,000 euros per month. Now, I understand for some that might be too much, for others too little, but I think it's just a fair understanding working number. It depends on your own example. You can run your own numbers. I'll leave a link to the calculator in the description down below so you can run your own numbers. But basically, let's leave it at 1,000 euros monthly at the beginning of the month. That looks good. So let's have a look how the numbers look like after 10 years. From your initial investment of 1,000 euros, you would grow your portfolio to 186,000 euros already. And right now you can actually see the additional deposits is the majority of that number because you would have invested 120,000 from your own pocket by making a 1,000 euro contribution every single month. And interest is only, in that case, 65,000 euros. So here it doesn't really look too exciting because the majority of the growth comes from your own deposits, right? But it gets better if you expand the period. So that's when the exponential growth starts kicking in. So let's change it to 30 years. And now you will see the magic taking place. Now, all of a sudden, it's a different story. You will see over here additional deposits in total 360,000, which, is quite a lot, but we're talking about a 30-year period. But the interest earned is 1.1 million. So 1.1 million plus the 360 brings your total investment portfolio value to 1.5 million, just with those little numbers. So you can see how the time really works in your favor. So when we look at it from the chart, you can see in the beginning, the first few years, the majority, the blue line is the deposits and the orange line is the interest that you make from it. So you can see almost until, what is that, year 11, 12, 13, it's pretty much 50-50, right? the majority still comes from your deposits. So that's a very linear growth. But then after a while, that's where the inflection point is, going back to the example over here, what I've shown you, that's the inflection point over here. And then you start having massive growth just from the interest. Because here you see the orange line, the orange bars getting more and more and more in the beginning. In the end, it definitely outpaces the deposit amount. And if I expand that period to 40 years, you can imagine it will get more and more proportionally the interest that you make from your investments rather than your own deposits. So at some stage, you can even switch off contributing to your investments and they will auto grow by themselves over time, basically. And that's the power of compounding growth, really. So you need to wait that inflection point. So here you clearly see how time can be your biggest friend or enemy. If you start too late, you might miss the train and you won't have 30 or 40 years to benefit from the compounding effect. At the same time, if you start early, that time is on your side and you can really start seeing the great results later on. Now, as I said at the beginning of the video, the 100,000 seems to be a magical number to start seeing compounding growth. So let me visualize you what I mean by that. So here we have another chart where we basically see the milestones of each 100,000 euros until we reach 1 million, right? So the goal is to reach 1 million over here. That's 0. So basically all these intervals are 100,000 units that we go, and that's the time period over here up to 25 years. Now, again, I'm talking about a monthly contribution of 1,000 euros at an 8% growth, because I think that's fairly realistic. If you invest into an S&P 500 ETF, that's what you could expect to see in terms of return over the next few years, at least averaged out, right? Some years might be higher, some years lower, but on average, 8% seems to be a reasonable number. Now, when you see over here how long it takes you to reach your first 100,000, you can see those numbers over here. So the first 100,000, if you keep on doing that, will take you 6.3 years. Now, seems quite a long time, right? And maybe not that inspiring to start because, 6 years is a long, especially if you're just starting off, seems like a long period. But that's where the power starts coming in. You can see from 6.3 years, if you don't stop and continue doing that into your future, the next 100,000 to go from 100,000 to 200,000 will only take you 4.3 years over here, as you can see that number over there. Then the following 100,000 to get you to 300,000 net worth will only take you 3.2 years. So you start already seeing how that effect starts speeding up over time. And as we go higher and higher, it goes incrementally faster. And you can see here, to go from 900,000 to 1 million, that last 100,000 only took 1.2 years. If I continue that game for another 5 years, it will be less than a year to reach 100,000 just by compound growth. And for me, that chart is so inspiring. You can really see how, if you stick with things, with investing over time, you see amazing results. The earlier you start, the more benefits you will get from that. And at the same time, it should give us confidence that while it's going to be painful and a little bit boring in the beginning, I must say I'm in the same camp. For me, looking at such charts, it motivates me to stick with it because I know if I'm consistent and keep on investing over time, my money will work for me and generate even more money in the future. For example, my dividend growth, which I started not so long ago. Only in 2021, I really started looking into this. Obviously, I started somewhere towards the end of the year. I made $15. Now, that hardly covered my lunch at the time, but then we moved to 2022. You start seeing already a little bit higher growth at $152 of dividends per year. Then last year in 23, I made $553 in a year in terms of dividend income. Now, this year, I'm already looking at 1,361, and we're still at the beginning of the year. If I continue this, I should definitely be hitting $2,000 for the year. And you can start seeing, the growth already kicking in. And I'm really early on, right? I mean, I'm only in the 4th year of my dividend investing journey. If I do that for another 20, 30 years, you can see that number exponential growth hitting 6-figure easily. So that's really reassuring to see, even though sometimes, of course, like everybody else, I'm also thinking to myself, Kai, this is so boring. The numbers are still so tiny and the growth is very little. But once again, we need to remind ourselves that it really takes time for money to grow and work in your favor. So stick with it in the long term. Make sure you survive the boring part. Stick with it. It's like working out, right? Yes, you can be all excited, watch some cool videos, get fired up. You go to gym 7 days a week for 3, 4, 5 weeks straight, and then you see no real difference, right? Maybe feel a little bit fitter, your muscles are sore, but then you lose the momentum. It's cold outside, you don't want to really go for a run. So after a while, you just say, this exercise thing is not for me. Now, versus the other person who did it anyways and continued for the next 20 years while you stopped your exercise routine, went for Netflix and pizza in the evening, you will start seeing after 10, 20 years a major difference in your physique, in your feeling, in your overall health level. And the same is true with your money and investment. So really, if I can urge you for one thing, I'm not giving investment advice, but make sure that you pay yourself first At the end of the month, when you get your money, take that money and put it towards your investments. Now, what you want to invest in, that's obviously up to you, your risk and reward balance. I made a few videos in the past where I talk about what kind of investment style fits for which person. I'm a fan of diversification. I have a bit of Bitcoin myself. I have some stocks. I have some individual stocks, some dividend stocks, some ETF, some real estate. So I really try to diversify because that helps me to sleep peacefully at night. But you have to find what works for you. If you're really just starting off, as I've shown you in this example, invest into S&P 500 ETF and then let it grow over time, over the years. Keep on adding to it and you will most certainly become a millionaire in the future. Just a question of time. So having said that, make sure you get your first 100,000 euros as soon as possible. Now I understand it might seem like a huge amount, especially if you're just starting off your career, but that's why I'm also a big fan of having a side hustle, different income sources that help you to get there faster, right? So that's the first way how you can really proactively earn more. You can also choose the second way, which is aggressively save. Now, I'm not a big fan of that. I do like a frugal lifestyle and I'm really mindful about the things that I spend my hard-earned money on. But if you earn 1,000 euros, it's hard to save 90% of that to invest the rest into your stocks and ETFs, right? You also want to live a little bit. So I'm a bigger fan of earning more money, but at the same time, be frugal, mindful, and cautious with your money so you have more to invest. And if you are interested in the topic of side hustle, then let me know in the comments down below. Write the word side hustle so that I know that you're interested and I might make a future video on that topic. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.